first thing I did was I got plugged into buying work comp medical receivables out of California. It's such an entrepreneurial business, whether you're a broker, whether you are a property manager, whether you own, and there's no like defined box of like what you have to do in real estate. You will learn, which is the biggest thing that you need, is you don't really know what you're doing, right? If you've been house hacking and you're going to buy multifamily, you don't know what you're doing yet, but you've got to get deals. Welcome to another episode of the Straight Up Chicago Investor Podcast. I'm your guest, Andy Friedman, and with me, as always, is your host, Tom and Mark.
I think I'll accept that.
Yeah, that was good. First try.
That was a bet. You're only
I'm not afraid.
You're only the second person that's ever done it on the first try. Usually,
Everybody's a little wimpy on the first try.
You know, is Lance standing there? He's waiting for bloopers. That's what he's waiting for. Trying to get, yeah. So unfortunately, we get bloopers.
I could drop some F-bombs. Like,
there you go, man. I love having brokers on the show. I love just hearing the background. I love hearing about just, getting started. It's such a tough industry. So yeah, just a lot of gems in this episode, a lot of parallels from the previous life too.
Well, I've said it before on here. There's so many people that think they want to get into real estate or want to be more involved in real estate, but they don't think they have any relevant skills. And there's so many skills or skill sets that people have either from their current career, previous career, their education that translates directly to some part of real estate investing.
Yeah. And all of this, it always comes back to just the simple things of like, all right, don't be an asshole and put in the work. Right? You can sum up the last hour of this episode, it's not easy, but it is so simple.
Yep, put in the reps and don't be an asshole. I really like that.
That's it. That's our new shirt.
New shirt.
Actually, on the way in, I was listening to Hermosi, and he had I'm gonna butcher it, but it was the magic you were looking for is in the work that you were avoiding, or something like that. Yep. It was like, oh, it's so good.
or happiness is on the other side of a tough decision.
Yes. Tough decision, tough conversation, whatever it is. It's we overcomplicate this thing
for sure.
So, all right, what housing provider tip of the week? What do we got here?
I'm going to give something else that might seem like common sense, but good rapport with your tenants makes your life easier. So, your tenants aren't going to call. If you have a good rapport with them, they're not going to call the city on you. They're going to respect your place more. They're not going to want to bother you for small stuff, and they're going to leave your place the way they found her, if not better. So, it's a very simple tip today. But it might tie into just don't be a dick. Have a good rapport with your tenants, and they'll probably take care of you back. Don't get me wrong, you have some rogue tenants that are just shitheads, but at the end of the day, most people are pretty good, and there's always that feeling that there has to be between house provider and tenant this kind of section. But you don't have to be friends, but you just have to have good rapport, good relations, and communicate.
Yeah, I think I forgot who said it. One of our episodes, someone said treat them like your neighbor. Right, you don't have to be your neighbor's best friend, but if you're not good with him, like it makes life awkward.
Yeah, for sure.
So, all right. So our guest today, I think we mentioned he's on episode 135. Just condo deconversions. We talk about that in great detail. Today we're going to learn a lot about his past life, his life as a broker at Kiser, and just some of the things that he's doing today. Gives drops a lot of nuggets, but probably most important for our listeners, just the do's and don'ts of dealing with a commercial broker, right? Help if you're looking to get started, or even if you have gotten started. Just a lot of good insights there. So, without further ado, Andy Friedman, welcome to the show.
Thank you.
Made the trip out to Roselle. We appreciate it.
I did. It wasn't too long of a trip, so happy to do it.
All right. So we got a lot to cover. So for our listeners, we had a great episode 135. Where you and your partner talked about condo deconversions, which we've hit on a couple times in the show. We'll touch on it today, but for a deep dive on condo deconversions, go back and listen to that. For today, let's start with, you have a pretty interesting career before joining Kiser. So let's just talk about, out of college, where did you start? What were you doing?
Sure. So I went to University of Arizona, and I was a stockbroker immediately out of college. And during that process of learning how to be a stockbroker and learning about markets, I became fascinated with markets. And I realized that what I was interested in was trading. I had a fair amount of fraternity brothers that were from Chicago, and they had older friends that were traders. And, I kind of learned at face value what it was, and decided to give it a go and moved to Chicago in 1995. I was a clerk in the currency pits at the Merc for 9 months, and then took a dive and put myself into the S&P 500 futures pit. And you're really, you're really on your own doing that. You put up some money with your clearing firm as security, and you go in the pit and start trading.
So like in 95, is this still like, there's almost like a stigma or stereotype, like just, testosterone dudes, like was that like what it was like in 95? Just go in and get this done.
It was like that the whole time.
Okay.
I mean, my pit, when it was full, was probably 300 locals inside the pit, and I can explain what that was. But out of that 300, there was probably 3 women.
Got it.
It was very testosterone, very high energy, and then when it was slow and it was just all discussion, it was very men's locker room, and beyond entertaining. So, I started trading my own account in 96. I got the hang of it relatively quick, and what I learned first was how to not lose money. And once I got comfortable with that, I realized, okay, now I can go try and make money.
Talk to us about that though, right? Like what is
Yeah.
that mindset? Because if you're 23 or whatever, like most people aren't thinking defense. It's pure offense of like, how can I get on a beach?
And there was guys that went into the pit that way, and they didn't usually last long, right? But I mean, look, when I started trading, I was 25. I had no mouths to feed. I lived with buddies. I had very low cost of living, and the stakes that way were somewhat low. But so learning how to trade, it could get very esoteric into going into how this all worked. But I traded as small as I could, which was one future at a time. I learned how to do it in the right spots to where I wouldn't lose money, and then started to get more of a feel for things and started to get more confident, and realized the next set of skills that I needed. And the biggest one was speed and speed of thought and action. And I would be in the pit and it'd be crazy, and you'd see a broker advertise something for sale or to buy. So like the way this all worked was some hedge fund client in Singapore wanted to transact X amount of S&P futures. They would call up their clearing firm, they would go to a desk on the floor, somebody would hand signal down to a clerk who told his broker, who was like on the ring of the pit, hey, sell 5. That person then would look inside the pit for a local like me who was willing to take the other side. And so you'd see all this stuff going on, right? And it was insane. So it took a while to just like process. But I got to the point where a broker had advertised something in my head, I'd think I should buy those. And then somebody else did. And then it was a good trade. And so I learned as soon as it pops into my head, I need to yell, buy them.
But this is so, I want to pull this in here because this is so relative to real estate on so many fronts here. Like, well, it sounds like, not lose money. Like, all right, I bought my little house hack in an A neighborhood, right? Like, like I'm just going to like draw some parallels there. And this is like almost analyzing deals, right? Like looking at deals and being like, I can't afford this now. I don't know if I should do this. Oh, it got 10 offers. Okay, I'm on the right track here. Like, I'm not crazy.
Yes, right. It's, we see that a lot. The guys that are second place, you get guys that come into the market where they get active and they're looking at everything and they're putting in a lot of good, solid second place offers. And that's frustrating to them, but I tell them, like, you're dialed in then. You're right.
Yeah.
You're going to get one of these, and it's not going to be because you just like way overpaid.
Yeah, it's you're process orientated. You're not, instead of results orientated. Like, I'm doing the right things, and eventually the results are going to be the fruit of this labor.
And look, I think most people in real estate are analyzing a deal and looking at the downside first. And I think that's the right way, is like, okay, I think this neighborhood's going to boom, or, I'm going to bet on the $7 billion happening by United Center, but if it doesn't happen, am I okay? And that was essentially my initial trading strategy, right? And then I got better at it, and I got bigger, and I could trade 5 futures at once, then 10, then 20, and so on. And I would get aggressive. But I could get aggressive because I knew not only how to go through a day with minimizing my risk, but also that if I got clobbered one day, the odds were I was going to make it back the next day. So it was go in every day. The bell rang at 8:30, jump up and down and scream. And, whatever my profit and loss was at the end of that day, my account reflected it the next day. I only put myself in danger of wipeout once. And it was just pure lack of discipline at the end of a Friday. Chase down money and over trading and getting stuck with a huge position on a Friday when there was a war brewing in the Middle East, and that was a stressful weekend. And when the electronic stuff opened up at 5:30 on Sunday night, it was a very small loss, and I was thrilled, but very mad at myself for putting myself in a position of getting really hurt. Look, there's real estate on a speed spectrum is the complete opposite of trading. Like trading was instant. Like we're buying, we're selling, we're buying, we're selling. The next day you made money, you lost money. Real estate's slower, but it's the same concepts of, we talked about it. Every building you buy should know that the base case is you're okay. And don't take that swing that could ruin you. Look, things happen in real estate like COVID, like rates going up 500 basis points that has done some serious damage. And I think a lot of people that are in that position right now were actually being conservative at the time. I don't think you can do a deal in 2021 when, the Fed funds rate's still 0 and the 10-year or the 5-year was, at 1 and say, let's analyze this deal and I'm going to put in a 6% for the refinance.
Let's
everybody's going to look at you like, well, you're crazy. But that happened. And, I guess the way to guard against that is don't take out recourse debt. But, so yes, there's similarities in that.
But rents did go up, so everyone really were able to eventually hedge based on that. But so what I'm hearing though is your ability to grow as a trader wasn't because your appetite at risk got wider. It was because you're able to think faster and clearer on what you're actually executing on.
Yes.
It's earned. It's an earned skill set and it's earned confidence.
It's reps. So
yes.
It was reps. But then there was another really important aspect to it was relationships. So as a local in the pit making a market, there's a bid. We traded one product. 300 people were trading the same exact thing. And so if you wanted to buy them, you put your hands up, and we used hand signals, and buying was your hands were facing you, and selling,
That's all I can
offer.
think
It was Ferris Bueller, right? But we all had to be the same price. So I can't be yelling in the pit, hey, I want to buy them at this price, and you're standing next to me saying, well, I want to buy them, but buy them lower. That's not how it worked. You had to either match me, shut up, or turn the market and go higher. So we're all bidding and offering the same price. And some broker gets an order to sell 20 futures and looks across the pit and yells, hey, ASF, sell you 20. Well, the guys standing next to me are like, what the hell? I was bidding the same price. How come I didn't get them? Well, it was years of being a reliable trading partner to all of the brokers in the pit. And, reliability was very important. You had guys in there that were sloppy, be going fast, and we traded, but I didn't write it down. And then your trade checker comes to my trade checker and says, hey, I'm checking, Mark sold Andy 20 futures at this price. And my trade checker's like, I don't have them. And then you got to flag me down. And what happened? That never happened with me. Every time a broker traded with me, you were supposed to check a trade when you traded with somebody shortly after you did it. So you scream across the pit, Andy, sell you 20, buy 20, great. 30 seconds later, you're supposed to be, one of us be like, hey, I'm checking. I bought 20 at a half from you. And you're like, yeah. That was a big safeguard because sometimes the broker across the pit is like, sell you 20, and you think you did them. And I've had this happen where you go to check it. And he actually traded with the guy that stood on the tier above me who checked it at the same time. So you had to have these, reliability. And then also, I would always say thank you to the broker that sold me or bought futures from me. Oftentimes that trade was terrible. Maybe the broker's given me the first 50 of 1,000 futures. and runs me over in the process of selling the other 950. Like I'm pissed, but I'm still, hey, I'm checking, I bought 50, thank you. So I got to the point where, I've got all these skills and I know how to actually trade, but you got to get the trades. And it was relationship building and a lot of parallels to real estate of reliability. I marketed myself in the pit. I made friends. I tried to be, care about everybody. And once you got a further relationship, you've got more odds of getting the trade.
Yeah, it sounds very similar to working with brokers here.
Yeah.
It's like, same thing. Is this guy going to close?
Yeah.
Right? Even if you don't, that's the first thing. If someone's selling a building, they're going to ask the broker, right? Like, is this guy going to close? And the broker holds a lot of control there to say, yes, I've done X transactions with this guy, blah, 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 blah.
It's more often with the seller. Hey, is this seller going to actually sell? Right? Look, we don't come out with giveaway prices when we sell buildings. That's not our job. And we're also beholden to the client, right? We've had plenty of times where we tell a client, your building's worth $5 million, and they insist on listing on 5.5. And that gets to be a somewhat tricky thing to navigate, but all the brokers are gonna say, that price is crazy. Are they sellers? And we try to be honest, right? And if they're a seller, we'll let people know. And if they're aspirational, we'll let people know, look, it's a great asset, this and that, they'll sell at the right price. But you've got to gain that level of trust in buyers who have a million deals going on, short attention span of, okay, do I believe Andy? When Andy says, all right, look, please just come make an offer, it's worth your while. Am I going to actually get that buyer to engage? And it's dependability and it's honesty and it's, all of those kind of same things to try and get the result that you're looking for.
Yeah, 100%. Good.
I was going to say, in hindsight though, so when you moved out of the trading into real estate brokerage, did you see all these correlations at that point yet? Or
no,
is this in
and
hindsight?
there was actually 8 years betwing trading and real estate.
This guy co-founded a brewery.
I co-founded a brewery. I did. The first thing I did was I got plugged into buying work comp medical receivables out of California, which if somebody does a podcast on that, I could talk for hours on that whole process. But it was an entrepreneurial, hey, the world had just crashed. There's a lot of opportunities here for high return type of stuff. So I raised several $1 million and did funds of that. California then changed their laws to make that not doable. I started a brewery.
I actually know somebody that has a medical receivable podcast. That's all.
Come on.
Come on. I'm going to
and medical, specifically medical receivables.
Yeah, receivables. Yep.
It's a super
trade.
interesting business. You can buy medical receivables on personal injury cases where if they win the case, they get paid. If they don't win the case,
I'll make an intro.
So this
crazy.
It's
a crazy world.
DraftKings for medical receivables.
You
could just
and medical receivables is a broad term, and it's an interesting industry. In work comp, there's a lot of fraud. A lot of fraud. And look, through that you learn lessons. But I will say this. Leaving the trading floor was actually very scary of thinking that you had no applicable life skills. Because there was, what we've just discussed, how do you have relationships and how do you do things? Those are things that you can't really put on a resume. And it was scary to be out in the world. And fortunately I had a cushion to where I wasn't going to lose my house or something like that. But there was no, I really had to reinvent myself, and not knowing along the way that I was picking up things, right? And real estate brokerage came about because of a family history with multifamily. My dad sold our family business when I was in college, and my dad and my stepmom kind of stumbled into multifamily investing. Born and raised in Denver, he sold the business. My dad and my stepmom bought a 3-flat in a crap area of Denver, fixed it up. It worked. They bought a 10 unit, they bought a 20 unit. And so, it was always on my back burner. it took me a while to realize that real estate brokerage was actually a very entrepreneurial thing. I had my own kind of stigma that I think some people out there have of like, oh, they're there to open the door, right? And once I kind of realized like it can be so much more than that, I went into it and became very entrepreneurial with, hey, there's this niche of condo deconversions, right? Which we're not going to go into, but like that was very satisfying to me of I can be an entrepreneur here and I can find a niche and I can go develop the niche and be the king of the niche. That was, and this is from somebody that traded for 14 years. And I think I've never worked for anybody. I did it for 1 year, right? I was a stockbroker. I had a boss. That was it. One of the reasons why I went to Kiser Group, and I interviewed every multifamily brokerage at town to see where I wanted to go. And you do learn pretty quickly that like, hey, you're 1099. So like there's going to be some rules here, but you do it yourself. Lee was the one that when I first met him, and I can remember this like it was yesterday, he just really pounded into my head like, this is an entrepreneurial firm. We have resources for you. We have suggestions. We're going to teach you. But then what you want to do in this firm, we'll back you. He discouraged me from deconversions at the very beginning. Now, he didn't say you can't do it. He didn't say you can't do it, but he said, Andy, like, I think this is like a lot and it's a different story, but it's such an entrepreneurial business, whether you're a broker, whether you are a property manager, whether you own, and there's kind of there's no like defined box of like what you have to do in real estate. And it gets to be a lot of fun to do these things yourself and then to also see what others are doing. And I was telling Tom when we both showed up and we were out front on the way here, not far down the road, there's a huge apartment development going up. I have no idea what it is because I don't ply my trade in Roselle. And in fact, I don't think I've ever even been in Roselle. And I'm like driving in and I'm like, okay, there's some stuff.
I'm here first.
there's some stuff going on here. And I'm like, oh, look, that thing's huge. It looks gorgeous. Like, what's somebody doing? I would never think you could build that in Roselle. And like, when I go back to the office, I'm going to figure out who's doing it. And, you're curious, but it's such an open-ended career of real estate in general, which again fit me because I wasn't going to go climb some corporate ladder somewhere. And in fact, nobody was going to hire me to, when your resume is like, I traded in a pit for 14 years, it actually was, people look at it and think poorly of you.
Yeah, you're almost an animal.
Well, we were animals. I mean, it could be very, it could be very raw.
Well, the idea, so I've been on my own, never really worked for anyone since I was 23, but the idea of going back and working for somebody on days is nice because it's like, but it's only for yielding the responsibility. But it's like, a couple weeks later, like, I'd be like, dude, like, I was like, you could do this better. We should run it like this. Like, I could not, I became unemployable many years ago, but, restaurant side of things, we manage a lot of commercial property and we see a lot of restaurants come and go and a lot of business plans that they think they're going to be this next big entrepreneur restaurateur. Why jump into that business and what was your experience there?
So the brewery was brewery, not restaurant.
Okay.
It was, so I met a guy.
Service food.
Well, we wound up opening a tap room and I can get to that. Yeah. So I was on the hunt, after trading for good, fun entrepreneurial stuff to do, right? And I get plugged into this guy who'd been at Coors for 14 years, but he had spent the prior 4 years gathering trademark rights on all of the original Colorado beer brands with a business plan to bring them back to life. And I thought it was genius. And there was a whole business plan that lasted for 6 months and morphed crazily. But, we started out doing what was called contract brewing, where another brewery made it for us. Our main trademark is for Tivoli, which was the largest brewery west of the Missouri until they went out of business in 1965. They started in 1865. started building their brewery right by downtown Denver that grew and grew and grew, and they built this humongous property, made it through Prohibition by selling cereal beer, which was non-alcoholic, but they were actually making beer, and there's a whole, you learn in this business, the speakeasies, crazy stuff. So we were actually, there was some things with the trademark on that we were a little bit leery about. Like we got trademark through the USPTO, which I learned all about how do you get a trademark. I mean, you learn so many different things. But we were a little leery of them, and we wanted to just, and when I say them, I didn't explain who them is. So the 200,000 square foot Tivoli Brewery building, Tivoli went out of business in 1960, I think it was actually 1969. A developer bought it and put nightlife in there and restaurants and all sorts of cool stuff, and it became a huge focal point of Denver nightlife. And then when Coors Field was built, which is on the opposite side of downtown, everything pushed down there and all the restaurants went down there, and there was vacancies in the Tivoli, and that developer wound up selling it to the state of Colorado, who then turned it into the student union for the Metropolitan State University, which it's like a 3-university campus, commuter campus, UC Denver, Metro, and I can't think of the other, but it's a big, so now the state of Colorado has got this building, Tivoli, and with the signage on it. We've got the trademark, but there's some risks there of one day the state saying, hey, you can't do that, and then our business plan is shot. And then we wind up talking to somebody at Tivoli and throw out the idea of how cool would it be if we built a brewery in there and joined up, and they did it. And so now they became our partner. We built a new brewery in the space that held the old brewery. And it was a 5-story vertical brewing system that they had. So the grain would go up at the top, it would get milled, it would go down to the next floor, it would get, and wind up in these 2 huge copper brew kettles that are still there. That's awesome. And we built the new brewery under it. Now, we built a new brewery in a brewery building that started its construction in the 1860s. We learned all about federal historic tax credits and Colorado state tax credits, but what we learned was, building something new in a 100-plus-year-old building, we had some overruns, and it was painful. But what we also created in there was a tap room, and it's gorgeous. Again, that whole process was painful. Getting tax credits is a pain in the ass. But that restaurant part of it, and it was limited food service, and it's still there, it's limited food service that we actually outsourced because we didn't want to be in that business. We wanted to be in the brewing business and, sell a lot of beer in the tap room, which is super high margin because you made it yourself. But we didn't want to be a restaurant, so we just outsourced that. And then the food, we don't make any money off the food, but you make money off the beer. And in that process, so once I got into that a few years in, I'm like, okay, Chicago is this huge town, and there's like 6 brew pubs. There was probably 15 in Denver. And this was when craft beer was really booming. And I'm like, there is a spot in Chicago for 1 or more brew pubs. And I looked into that a lot, and I finally decided not to because I spoke with a guy that owns a brew pub outside of Vail that we're friends with his daughter, and he'd been doing that forever. He's like, look, you're not just running a brewery when you run a brew pub, you're running a restaurant too. You'll be here 24/7. And this was at a time when my kids were young, and I was like, you know what? If I was 25 again, I would do this. But there's no way. And ever since then, going into the restaurant business has it's tough.
Yeah, I mean that's very niche, and that's actually really mainstream now. We actually have one right here on the other side of the tracks, Pollyanna.
They're everywhere. It's great.
And that seems like the outsource the food, but yeah, the restaurant business, the success rate's like less than like 1% after a year or something like that.
It's
Same with podcasts. No big deal.
but at least the podcast doesn't cost you a ton up front. You know, that's the danger.
And it's
of
not
a
weekends and
restaurant.
nights.
Yeah,
That's the big
Exactly.
one.
You're not getting the call because somebody didn't show up and it's, 8:00 and guess what? You get to be GM tonight.
Yeah.
I think restaurants, the problem with restaurants and same with brewing and same with running our tap room is your revenue is what it is and your margin is what it is. And it's low margin and you have to do volume and it becomes a cost control business. And that's really hard when you're trying to make your money to make sure you don't overorder the lettuce and you got to throw it out the next day. Like you are literally fighting for every point of margin and it's a lot of brain damage and seems horrible, frankly. Now, I also see Small Cheval that is, my family, we would drive down from Deerfield down to Wicker Park for a fun Sunday night to go get Small Cheval, and there's one in Rosemont now. And that is, to me, kind of a genius business. They make burgers and fries. They're incredibly good, which is part of the success, but they're just cranking out burgers and fries, and they've got to have margin. And they're opening up one in Wilmette. Like, that thing's going to grow. So I think if you make it in the restaurant industry, you're loving it. I think it's tough.
you have to have the product though. Like
we're
in a food city,
It's
but
similar
you have
to brokerage though, right? Like how many guys don't make it past the first 2 years? Like
Yeah.
what's that
Tons.
stat?
Yeah.
That's insane.
Tons, and trading was huge attrition. We had like I got my you kind of had like a trader orientation thing, and they did a lot of stuff, and there was 20 of us that I was in. A year later, there was 2 of us left.
Yeah.
And brokerage is the same thing. And when we interview at Kiser Group, and we'll do like a first interview with somebody with Lee and the kind of top brass, and then he'll have brokers come in and ask opinions. And we're very clear with people before they come on of, hey, you aren't going to make anything for a year. If you make something, it's going to be token. You may not make much in your second year. Like, you need to be prepared. And
So wait, let's talk about this real quick.
Yeah.
Sorry to cut you off, but like,
Yeah, no.
because like the stereotypical path is you tell that to some 25-year-old who has no responsibilities. It says, "Cool, I'll bang this out. I see the light at the end of the tunnel." You were not 25 when you went to Kiser,
correct.
right? Like you had 15 years of experience, maybe more. Talk to us about that experience, right? Because now it's different when you have responsibilities, you have a family. Like
Yes.
you probably probably don't want to make 100 calls a day type of thing.
So yes, I mean, look, there's many, I think before, the financial thing, I was able to do it, right? Trading was good to me. I was able to do that. It doesn't mean it still doesn't hurt when
see it
it
going
takes
down.
everything longer than you think, and it's you start
Yeah,
to
I'll do it in 6 months
self-doubt.
because I'm smarter.
You
I'll
start
work
to
harder.
self-doubt,
Yeah.
and again, trading after I don't think it was even 6 months. I was like, all right, I'm going to do this. I'm good at this. I'm going to figure this out. Brokerage, it took a while. I mean, it was 2 years before I closed my first deal. And part of that was a big condo deconversion, which took forever. But yes, there's self-doubt along the way. There's a huge dose of humility in it as a second career. I mean, I once upon a time was known by all in my pit for being, I was highly respected down there, and picked to be on committees for the Merc, and to going to be, let's go start calling people that don't know who the hell I am, and gets 10 calls a day. It's a big humility burger. And that was not easy. Whereas the younger kids don't seem to care, and those seem to be the good ones, and we have one in our off. Some of these kids come in and they're like, I want to cold call. And I'm sitting there like, what's wrong with you? Like, what is going through your head? But so, I'm not going to sit and bang out 100 cold calls a day like the 25-year-old. And so I realized I needed to have niche and make my name through niche and make my name through intelligence. Not that everybody's not smart, but there's some very successful brokers out there that aren't smart. They just work their ass off. My way to succeed is through dealing with the more complex and being more of I've got more years under my belt and I can talk to people much different than a 25-year-old can. But yes, I mean, to go back to the attrition, it's tough. It is a high attrition business. I think a lot of it, I think there's a need for brokerage firms. I think it's very tough as a brokerage firm to do your hiring, right? Everybody kind of wants to grow, so you need bodies. And there's only so many bodies to pick from, and it's only so easy to tell if this body is going to succeed.
It's a 2-year gamble.
And it's a 2-year gamble, and it's a cost to the brokerage firm. Like, each broker is expensive. I've talked at length with our COO about this, and the first time he told me, it kind of blew my mind. You've got a CoStar license. You've got a lot of stuff.
CoStar in itself is expensive. If that was really checked.
That's another podcast. But
CoStar will gladly accept your sponsorship.
yeah.
We know you have the money.
I think hiring is a tricky thing, and I think some firms, I don't think as much anymore, but I think some firms used to just be like, let's just hire and let the attrition happen and hire 20 people, and we know that 2 are going to make it. And I think that's kind of a disservice to those that you are hiring. But it's a tricky thing, and
There's a huge cost to that too, though.
There's a huge cost. I think there was less cost before when the business was less subscription based. And from what I hear of Lee back in, when he started, it was, go walk around. There was no CoStar. There was no way to just go online and get stuff. So I think it was less expensive to hire somebody, but there's probably a lot of people that have been hired that shouldn't have been in every company. It's something that Kiser Group has worked very hard on let's be very careful about who we hire. And don't waste our time and don't waste theirs. And frankly, in the last 3 years, I would say that our attrition rate has been much better than it was in the past.
Yep.
I think it makes it more of a milestone for somebody researching, like, hey, they only hire so many people. So now you actually find the people that have harder drive that actually want to be part of that, because they know that there's limited options for people to become part of that. So that's kind of cool. In itself.
If I was in that seat interviewing and I saw everyone there has been there 5 years or more or whatever, then that would be like okay, here we go, right? Like, that would be a huge turn on for me.
But you know what? Most 25-year-olds don't think
Correct.
that way, and they're not mature enough to know that. But look,
what's my split?
Right. Right. Questions like that. But it is fun when you see somebody come in and you know that they're going to work.
Yeah.
That it's going to work out. And then you try and extrapolate into your hiring of the next one of like, all right, what qualities did that person have? And you learn from your mistakes. I hired an analyst in 2019, and he was straight out of college, and he was gung-ho, and he wanted a call. And what I really needed was an analyst, because I had like a lot of stuff in my pipeline, and I was spending every waking hour at home at night underwriting everything, which I actually still think every broker should do, because then you really know what you're looking at. But I hire this kid, and all he wanted to do is cold call. He had told us that he was good at Excel. And I hope he's not listening to this, and I'm not meaning to talk trash, but he wasn't really good at Excel. And so I had to undo a lot of damage in there and missed some, but he was so gung-ho, but he was a bull in a china shop. And, did some damage along with some good, and then COVID happened and he left. But you start to learn, you learn from like, all right, hey, I need an analyst. I hired a junior broker instead, which I didn't really need, and then it didn't work out. So like, yeah, he wasn't the right fit for it, but it was as much my fault as it was his fault for not recognizing, like, this kid wants to go crazy on the phones. That's awesome. He should be going the brokerage track, not starting the analyst track. So I kind of feel like I did him a disservice in that regard.
Yeah. So let's talk from an investor perspective, dealing with brokers, right? Because a lot of them you made the comment earlier, like, oh yeah, they got the listing, they hold the door for us, and like we do our bids, but like brokers can be very, very useful on both the buy and sell. And a lot of our investors who might have only done like the house hack, and that, like they're new to the commercial, right? They're going after their first 8 unit, their first 10 unit, or whatever.
Okay.
The game is much different than residential. So let's outline that a little bit here.
So that's a great, because I have a list of things those people should and shouldn't do. But
let's hear it. Just start.
All right.
Start preaching.
So you're somebody that's done house hacking and you want to get into multifamily. You call you figure out who the brokers are in the neighborhoods that you want to be in. Or maybe you're calling every neighborhood and you don't know yet. And be honest with them and say, hi, I'm Tom Shallcross. Here's what I've done so far. I'm new to multifamily. I'm learning. I may not be ready to buy something right now, but I'd love to see what you have. Please put me on your email distribution list. I would love to come see tours. And be honest. And call those brokers back, because those people will make one call. Here's who I am, and we're happy to take those calls. And I've spent a lot of time with people that are in that position, and most of them, though, will call you once, give you the info, and never call you back. And I'm not thinking of calling them back. I'm too busy. But if that person's regularly reaching out and, hey, I'm just checking in, what's new, like, then you're going to be on the broker's mind. And when the broker gets the 8 unit that's in the neighborhood, that I think might work for you, then I can be like, hey, because I've been talking to you on a regular basis, and it doesn't have to be a long conversation, right? It can be a 1 minute every 2 weeks. You're going to be in my mind. And when we get something, I'm going to call you. And maybe you wind up getting it, maybe you don't. And if you come in second place, I'll give you all the info on here's why you came in second place. Here's who bought it and why. And did they overpay? Did they not? Was there a special circumstance? You will learn, which is the biggest thing that you need, is you don't really know what you're doing, right? If you've been house hacking and you're going to buy multifamily, you don't know what you're doing yet. But you've got to get deals, right? And that's the primary thing for having a good broker relationship. We spend so much time creating inventory. And it's hours upon hours upon hours of cold calling and networking and this and that to get find that one building where somebody's actually going to sell it. And that's really valuable. And, even though most of what we do is broadly marketed, so everybody's got a chance, you still need, like, you're getting now 30 emails a day of properties out there. Every investor is going to see, oh, Kiser Group's got this, this, and this. You may see something in your inbox or miss it, but even see the headline and be like, I don't think that's for me, and not pay attention. Except for you and I have been talking every 2 weeks, and I know that, like, hey, this is going to be good for you. Like, hey, I'll call you. And I'm trying to build a relationship with you, even though in the space you're nothing yet. But if we can have a relationship like that, I help you, you may help me. Like the world of transactions and getting every facet done is going to be better. I've got one guy that's very experienced. He's been in this industry longer than me, and he does stuff on his own. He's active. He is kind of a partner with a very large group. Like, he's big. He calls me every day. He literally calls me every single day, and I love talking to him. And it might be 5 minutes, or it might be half an hour. I learn from him of what's going on. He learns from me what's going on, and every deal that I have. Hey, here's what I got. And many times I'll be like, hey, this isn't for you. Tell me if I'm wrong. I don't think this is for you, but like, here's what I got going on. Or like, hey, I've got one for you. But he's so in the loop. And that is so important to his success, is you've got to be in the loop, because there's only so many opportunities and there's only so many good ones. And if you're not in the loop, you're not going to get it. So that's kind of what to do. here's what's not to do. And I got this call yesterday from a guy that definitely is either under Grant Cardone or JT Fox and paid a lot of money to buy a dream at a seminar, and calls me up and says, first, I pick up the phone. This is Andy. Andy, how are you? I'm like, okay, who's this? Says his name, and here's who I'm with, and I've never heard this company, and I'm like trying to Google, and I can't find anything, but we're looking for $15 million and up, 150 units, light value add, and it's got to be a really good deal. Andy, does this sound interesting to you? And I'm like, oh, yeah, thank God you showed up in my life. Because before you, nobody would buy buildings, right? But I will get smaller people that say, here's what I'm looking for, but it's got to be a really good deal. Bye. I mean, when we've got the really good deals, I'm not calling you that I don't know before. And it's not that it's some favoritism thing. It's, okay, I've got something that's gonna trade, and
I'm not gonna risk it here.
I know this whole roster of people that would buy this building and be reliable, and I know who's not reliable. Look, I know who retrades. I know we know everything. And when a seller says hey, here's this, and whether it's sell it quick, and look, we never get the calls of I've got to sell my building in 5 days, just sell it at whatever price, right? That's kind of a dream, but we get people who are like, look, I need to sell this. And I'll talk to the unknowns, but why am I going to go with you when I've got all these people that are proven? So don't call me and tell me you only want a deal. That to me, look, I'll buy the deal if it's that screaming. Don't give me sour grapes is another one. And we practice the same thing. I've never made a sour grapes call. I've been really tempted, but don't do it because it's a bad look, and it's really bad when somebody gives you sour grapes that doesn't make any effort for you, right? So
I don't know what sour grapes is.
Sour grapes is I pitched
and moaning I did this.
I pitched for your listing. You interviewed 3 other brokers. You gave it to somebody else. I call you up and scream and you asshole, Mark. I was the right one. F you.
Gotcha.
Why didn't you call me or things like that. So we closed a 41 unit deconversion off market earlier in the year. This thing had been, Jake and I pitched it in 2020. We worked this thing for a year, and when he decides to sell, he gives it to his countryman broker. It came out overpriced by 30%. It was under contract and fell out for 2 years. We go do it off market. And the buyer that we picked, it was somewhat of a random thing. We were talking to this person that we had transacted with a year ago, and what's out there? And we're like, well, 505 Melrose just fell out of contract. Do you want to take a run at it? And we did. That thing closed at $176,000 a unit, 4+1 on the 500 block of Melrose and Lakeview. It was a good deal. It wasn't the screamer that everybody thought it was, but I got calls. And why didn't you call me on that? And what the hell? And most of those people were people that rarely returned my call. And I'm sitting there thinking why do you think that I would have called you? When the last 8 times I've called you and left messages, you haven't called me back. Sorry. And this one even too, it wasn't a conscious decision of, let's go chase it with this group. We happen to be talking to that group that day. But if you aren't, it can't be a one-way street, right? And if you think that because I'm a broker and you're some buyer that's small, medium, large, that you're entitled to get the off-market condo deal that's a good deal, you're wrong.
Yeah, 100%. I think going along the same lines of the not sour grapes too is also when it is either overpriced or doesn't work for your numbers, frame it up hey, this doesn't work for me. I'm at this number here.
Not you're overpriced.
Yeah, not you guys are crazy. Not you guys are batshit crazy.
Right.
Yeah.
Hey,
well,
I'm not the buyer here. I'm a buyer at this number. If you have anyone over that, cool, congrats.
Yeah.
I'll hang around the hoop, and if it's there,
I
Hit me up.
love the call when we close a deal at like really good pricing and you talk to the person that was like, you'll never get that. This seller's nuts. And I don't do it in a vicious way, but it's kind of a fun needling of like, yeah, you said this was too much and look at what we got. But you know, to tie back to the trading, the sour grapes thing, there was a lot of guys that had sour grapes in the pit. Again, we're all bidding and offering the same price and somebody get it and then there's sour grapes and scream at this guy and you asshole. And I learned from them, like this doesn't get you anywhere. It's a bad look. And so I've carried that forward to this. And again, we don't give sour grapes. And there's been 2 or 3 times where a sour grapes call was deserved to be given by me, but I won't do it. But we get them and it's like, hey, it's a two-way street. Sorry. You know, back to, you know, maintaining a broker relationship. There are times where we pitch and we don't win. And I get that. And if we pitch and don't, you know, as long as we get a fair chance on something, I feel okay. It sucks to lose. We're all competitive as hell. But it's like, okay, I'm not going to win 100%. But you'd be amazed how many times sellers and well-established ones don't call up first and say, hey, Andy, I just want you to know I'm giving the listing to another firm.
Yeah, you see it
Here's
online.
why.
You see
and seeing it online sucks.
Yeah.
And that's the only sour grapes I ever gave to somebody, and it wasn't given as sour grapes. I was like, hey, you know, I kind of got promised this building, and you didn't give it to me, and I just would have liked to find out by you, not by somebody in my office being like, hey, did you see this? You know, somebody else got it. Like, that's not fun. So, you know, everybody in this industry needs to be in a relationship that's on a two-way street, and the ones where it's truly a two-way street do really well. And everybody that I've seen successful in the business on any side of it, they will take your call. They may not want to talk, and they may be like, hey, I'm super busy. What's up? I'm just calling to chat. Talk to you next week. Or, hey, I got something that I think you might be interested in. Better time in an hour, whatever. But if people don't engage back with us, you're just not in the loop, and you're not going to know what's going on, and you're not going to see as many deals.
Yeah, absolutely. Going back to the investors, so we have like the do and the don't there, and you talk about a two-way street. Are there any little things that, you know, that house hacker can actually provide value to your end? Because it is, even if they have the right intention and they're saying the right things, it is hard when you're newer to actually provide value to someone who's experienced. So is there anything there that they can do where it's actually like, yes, this is valuable to me?
That's a good question. I have limited experience of people being house hackers and coming to us for deals. But I would say,
It just tells you there's an opportunity. Right?
well,
Like,
yeah, and
step out
this
your
goes
comfort
into
zone and
where
do it.
the opportunity is when we get buildings that are 2 million-ish and under. It's much different than if I have a $10 million deal in Lakeview, like there's such a developed buyer pool that's gonna be better price and terms than anybody else in the world. Like, not that it's easy, but there's defined call list. When I have $2 million deals, and I have a great one at 2541 North Southport right now, if people want to call about it, but there's not this developed repeat buyer pool. And you wind up getting into a lot of people that are either first time there, or they've got 1 6 flat over here and one over there, and they're not really known. So I do need that audience, right? And so anybody that is a house hacker that's like, I want to go buy a 6 flat in Lakeview or Lincoln Park, that's helpful to me. And we can mark them like that in our CRM. Again, I would highly advise, like, keep calling me. But I would also think we've all got to learn, right? And learning comes from unexpected places. So to think that a house hacker has nothing of value to me as a multifamily broker would be a very narrow-minded thought process. I don't know what a house hacker can teach me, but I guarantee you there's something. Mm-hmm. And I'd love to go take some 6 flat tours with a house hacker, because I know I'm going to learn. We learn everything. We learn a lot on tours. You know, we get a building for sale. We probably have visited it once. gone through the financials. We only know so much about the building, and it only gets more complicated as the building gets bigger. But it's awesome to go through buildings with people that know what they're doing, and they're like, I would do this. And you're like, oh my God, I didn't think of that. And you start to learn more about the building, and maybe there's something really cool that you can do, or maybe there's some kind of pitfall to the building that you weren't aware of, which can also be a trap, because I've had some freak out moments where people are like, this isn't code, this one bedroom, the door is in the bed, this isn't legal. And I'm like, oh my God, we're not going to sell the building. But you learn, and that's something else that somebody could do as a house hacker on a building tour with me. Like, ask me questions. I'll answer everything. And don't worry about looking dumb or looking inexperienced, because you've told me, if you're honest from the get-go, like, I haven't done this yet. Okay, great. I'm happy to educate you, because, some portion of you is going to wind up some big landlord that I'm going to do a lot of business with. I'm sorry, housing provider. But, and I'm willing to bet that an engaged house hacker asking me questions on a building tour is going to wind up saying something where I'm like, huh, didn't know that. Yeah. So anybody intelligent, anybody that's creative, anybody that's got any type of housing experience has got to have something of value to me.
Cool. Good answer. So we usually kind of wrap with like the outlook on Chicago, but the brokers, let's make it a little more distinct here. Neighborhoods you're bullish on.
Neighborhoods I'm bullish on.
Give us 3-5 years. Like, what are you feeling? What are you feeling hot on right now?
So most of my deconversions I'll do anywhere, but the multifamily stuff, I'm mostly like city center up through Irving Park, and most of it Lakeview, Lincoln Park. It's hard. I love those neighborhoods, and I think it's a great place to invest. I think it can be very tough to buy there. If something big comes on the market, you're not getting it. Although these days it may be a bit easier, but it's tough to find something in those areas where you're like, these returns are going to be eye-popping, right? Like, the growth here is probably not going to be eye-popping, but there are deals to be had where you can buy a 5 flat, a 6 flat for mid-6 caps that's gutted. And
you had the one by my building like a year or two ago, 800 something Addison.
815 West Addison. Yeah. Oh, right. By the 4 flat that you did.
Yeah.
That was one where they made us list it too high of a price. But
it's funny how you remember those. Like, that's an emotional trigger you just had right there.
Oh yeah. They made us list too high on that, and we couldn't get tours. And we had to really work as the brokers. Like, look, you ride this balance of, I can't throw my client down the toilet and be like, oh, they're listed at $5.5 million, but they'll take 4.6. First of all, it was a 16-unit condo building. I don't know what they're all going to take necessarily, but like, it was hard to get people there, and it traded for $4.9 million, which was a good, fair price for the building. But back to Lakeview and Lincoln Park, like, I am bullish on those because it's so proven of what it is. And this building I have for sale on Southport, if you get a vacancy there, it's going to be filled in 2 seconds. You are going to get the return that you signed up for. Whereas go buy a 10 cap on the south side. You're probably going to wind up at a 2 cap or a negative cap unless you really know what you're doing. And there's something to be said for Lakeview, Lincoln Park. I know what I'm getting, and there's probably is still going to be appreciation there. I love Portage Park, but there's next to no multifamily supply there. But it's right by the highway. It's geographically not far from downtown. It is right by the blue line. It's got major 6-way intersections. It has got development now. There's just very little multifamily of scale. But if I was a house hacker or a 4 flat buyer, like, that neighborhood makes so much sense to me.
Every block ends with a 4 to 8 unit.
Yes.
Right, the little thing.
Right, they're on the, and I only know
not half of them, but the other half are there.
Right. But like, I would love, I think it would be a great thing for somebody to be able to go build something new there, and it's going on. And I know it's taken a while. I think it's GW's building on the one of the 6-way intersections. Uptown Edgewater are interesting. I don't know if Uptown's kind of run its course. I think Rogers Park's interesting. I think it's less interesting than it was a few years ago because there's been some price appreciation up there, but yet you've still got some of the drags, whether it's political up there, but I would also think in 20 years that everything up the lakefront has got to appreciate.
Yeah, makes sense. Cool. Anything else before we get to the wrap-up questions?
That's it.
All right, let's do it.
All right. What's been your competitive advantage? How have you been able to do all this while others wish they could be as successful?
Because I started in a niche that nobody was. There was one broker at CBRE that kind of held himself out as like, I do condo deconversions, but was really, I could tell not giving it the full boat. And so I said, that's going to be me. And I set out about going into a niche where people would do things in a niche, but they didn't hold themselves as I'm the master of the niche, right? And it was, kind of BS it until you make it. But I've now done far more of them in town than anybody, but that led to other things, right? That led to opening up straight up multifamily sales for me, and that niche enabled a further career or further transactions for me.
All right, you've provided a lot of insights already, but what's the one piece of advice you would tell someone looking to buy their first multifamily building?
Okay, the one piece of advice, let me whittle down my 10 pieces of advice to...
like if this was the 10 pieces of advice, you got to see number 3. what is that?
Stay tuned for tomorrow, and on the next podcast, you'll get number 4. The one thing, I make sure you're not going to lose money. Like, make sure that you're not over levered. Make sure that your every assumption is grounded in reality. And stress test it. And hey, if I'm 10% off on this stuff, am I okay? Make sure you're well capitalized. Don't bite off more than you can chew, and make sure that you're not going to get hurt.
Yeah, no, I love it. Real estate has been proven to work unless you run out of money. Like, right? That's liquidity. Real estate works. We know that.
People lose buildings because of loans. If you don't take a loan, you're not losing a building. You may have a really crappy return and lose some money, but like, risk is just like the pit. The amount of risk you took is your decision. There were guys in the pit that only traded one at a time, the smallest you could trade for 20 years. And they were happy with how they were making their living. And some of those guys were smart because they hit singles every day. And then there was guys that were swinging it and taking huge risk. But that was their own individual choice. And their reward and the amount of those guys that got really smoked was really a direct result of how much risk did they take.
What do you do for fun?
In the summer, I play golf. And in the winter, I play paddle. Proper name is platform tennis. Love it. It's an outdoor racket sport that you play in the winter. Middle-aged men competing with each other against other clubs once a week. And then afterwards, the home club provides dinner and unlimited beer. Like, it's awesome. It's very social, very athletic, and satisfies that competitive sport part of the brain that most of us need but don't get anymore.
I'm going to say it on air because we've said it a couple times now. We need a straight Chicago investor golf outing. We got.
I will sponsor.
There we go.
I will sponsor.
All right. Give us either a good book, podcast, or self-development activity that you'd recommend to our listeners.
Oh my God. I'm reading a book right now called Range that was suggested to me recently by somebody I just met met this through the NBOA kind of response to this new ordinance. And he wanted to know my background, and I sent him the resume, and he saw my resume that's very different than the average person and all over the place. And he said, you should read this book, Range. And it's all about people that have a broad range of experiences doing better than people that have specialized in one thing their whole career, and parallels with sports. And I've got kids that have been through the travel sports and high school athletics, and there are kids that, do baseball 24/7 all year round, or pick a sport. And a lot of this in the book is about how athletes that didn't specialize, Wayne Gretzky, played lacrosse. I actually grew up playing lacrosse too, but like Wayne Gretzky wasn't doing travel hockey. Wayne Gretzky was playing hockey. He was playing lacrosse. He was doing other things. So it's a very interesting book. And it's also kind of makes me feel better about like, okay, I have this crazy like career path that's all over the place. Like that's something to be kind of proud of, but it's really interesting on like, you've got to be expert in your field to be successful, but that doesn't mean that you should only be doing things in that field. So there's my recommendation it's called Range. I can't tell you the author, but
We'll link to it in the show notes though.
All right. Besides yourself, name a valuable resource to other Chicago investors.
besides myself.
Besides yourself.
So you're looking for a person.
Yeah, this
company.
could be lender, attorney. Let's go outside of Kiser. I know you can say a lot of people
Yeah,
there.
no. Guy named Dean Huber at Walker and Dunlop, mortgage broker. We have done a lot of deals with him, and he is so good. And we all want a deal to close, right? And it's not always so easy. And sometimes the lending is the difficult. And the first one we did was Graceway Corners, big mixed-use building on Broadway, Halsted, and Grace that we marketed and sold in COVID. And it was half commercial. The revenue of it, I think, was 35 or 40% in COVID, right? And it's COVID. And the buyer wound up being a little over leveraged on his personal balance sheet. And it was Dean's job to get the loan. And he finally got it on like the third. It was hard. And I think without him on that, I don't know if that deal would have gotten done. We have since then gone to Dean for our deconversions. And he was on Granville Tower that we just did. There was 154 units. We did them with 3825 North Pine Grove. These are not easy deals for still, they're kind of foreign to a lot of these banks, but he's so good at like explaining what this is. And it's to know that when you go into a complex deal that is not going to be straight up financing, that Dean has got your back and is going to get the buyer good financing and get it to close is huge. And, that there's a team on all of these. He's an incredible resource. And I would recommend anybody listening to call him.
Awesome. We'll link to him in the show notes. So, Andy, thank you so much. You provide a ton of value to our listeners. How can they learn more about you? Is there any way they can provide value to you?
Give me a call. Look me up on kisergroup.com. My number's on there. Give me a ring.
Sounds good. All right, we got our Chicago fact. I think you guys can get this one. Who are we playing for? I'm assuming we got Kiser as a sponsor here.
Yep. So we got today's sponsor, Kiser Group. We're playing for Alvin Chester, who left us a 5-star review on iTunes. So Alvin, if myself or Andy gets this question right, you get a $50 gift card brought to you by Kiser.
All right. So I got a deal brought to me on Wilson. Thank you, Teddy Coolman. I was going to give you a shout out for that. And my wife was joking about this, and she said, "Oh, someone on W Street. I haven't done one of those before." And we've actually done a lot on W Streets in Chicago. Just there's a lot on the north side. Just kind of, I think it's like my fourth or fifth one. Which is I don't do that many deals. Which is kind of funny. So, question for you: how many W Streets can you guys name in Chicago? And I'll give you 20 seconds. And should we set it at?
This is cruel.
I think you guys get like 8. Is that a fair number? 7, 8, somewhere in that category.
I'm going to be under. You're putting me on the spot with W Streets, but tell it.
Let's do it. All right, here's some clues. Think about it. There's a few east-west by me. There's a few downtown. There's the longest street in Chicago. There's some with some famous bars.
Are we going as a team here?
Yeah. Rifle fire. I'll give you.
Wabash.
All right.
Wabash, Western,
Wilton.
Wabansia, Waypool.
I don't got Waypool, but you sounded confident. There's a few up by
on the drive back to the office. I'm
There's
going
a
to think of 20
few
of
in
these.
Logan, going
Waveland.
east-west. Waveland. What's one just north of Waveland? Between Grace and Waveland, there's
Warwick.
There you go. There's
War
there's a
Inn.
bar.
There's War Inn.
There's War Inn.
Yeah,
north of
runs through
there.
downtown West Side.
By Warren. I also I said Wilson, but whatever.
Yeah, Wilson.
How many are we up to?
You're close. What's blank on Weed Street? Oh, I gave you Weed Street.
I used
It was on Blank
to
Street.
live right by there. There's so many more.
I give good
This is
clues.
gonna I'm gonna think of them all on the drive.
Water Street.
When you went to
Water.
your friends at DePaul, you went to McGee's and Kelly's. That's on East West Street.
Oh, Wrightwood.
Wrightwood.
God, that's
Webster.
Webster.
You guys did pretty good here. We got to be over 10. A few more.
Are there any trees that start with W?
No, did we downtown?
Wicker?
We didn't
No.
say Whacker, did we?
No, we said
Whacker?
Whacker, Washington. I would have given you both upper and lower.
Our office is on Washington.
Well, we got it. So
We're there with a little help from Tom.
Wilfred, Whipple. We could have
Whipple.
got. You said Winchester, Winona, Wolcott, Woodlawn, Warner,
I didn't say Woodlawn.
Wellington. I got
Wellington.
a building on Wellington.
I
Wolfram. That was good, man. You guys got it.
I used to live on Wellington Street, and I didn't think of that.
All right. $50 gift card, Alvin, brought to you by Kiser Group. Good job. That was awesome. So thanks for coming on here. Tom, thank you.
Thanks for having me.
Yeah.
Listeners, do you know someone that owns a lot of units over a long period of time in a specific neighborhood or suburb? We want an area specialist interview. So if that's you or someone you know, help us and send us a message. So we're looking for people that are specializing so we can do more neighborhood shows. Andy, thank you. Tom, thank you. Listeners, we'll see you next week.